If anyone can describe the aftermath of June, I would say that people had cause to celebrate but not signal the end of the race. Inflation had been at its lowest point since 2021, but most people still expected the rate hike from the Fed despite how they paused rates at their June meeting. Beyond the July meeting for the Federal Reserve, people had no idea what to expect. It seemed like the only clue that could give us info on what the near future could be like was looking at July's inflation data, which is expected to release on August 10th. As a result of the future being so speculative, the market stats in Las Vegas were a wild card, having an air of unpredictability. Will the Vegas market continue to show new trends, or will it revert to a predictable pattern? Stay tuned for July's market report. Before we start, don't forget to subscribe and follow me on other social media platforms for more real estate content. Now let's begin. First up is the median sales price. July clocked in at $400,000, which is the same as June. Year over year, the annual prices have shown a negative $5,000 difference. This is the first month where prices have leveled off monthly after 4 consecutive price declines. It is also the first time the yearly comparison has shown a negative gain. What does this mean for the future of prices in the Las Vegas Valley as 2023 goes on? Now we go to inventory in the Las Vegas Valley. July shows up at 9,741 units, a decrease of 5.3% compared to June. July of 2022 displayed a difference of 39.4% for the yearly comparison. This is the third time we see monthly inventory post a decline, and the declines are getting bigger. What is the future of inventory in the Las Vegas Valley? We now cover pending transactions, where a seller accepts a buyer offer and the transaction goes into escrow. July sits at 32,136 units being under contract, marking an increase of 0.9% when compared to June. July of 2022 had a difference of 30.1% year over year. We go from pending to the final stage of an escrow, which is closed transactions. Simply put, these are the number of home transactions that finish escrow and transfer home ownership to the buyer. July clocks in at 31,419 units closing, marking a decrease of 1.03% when compared to June. July 2022 showed a difference of 34.3% year over year. We now go to our final stat, which is median days on market, or in other words, how long it takes for a listing to go live on the market to an accepted offer. July sits at 25 days on market, which is 2 days more than June. Annual gains show a decline where it took 9 median days to sell in July 2022. As the months go on, we see the days on market increase at a considerable, consistent pace. Alright, I'm going to cover the notable developments and give you some trends to look for in the future. Some things are going to sound like a broken record, but some developments will be new. The seller's market is still present, and there is proof that it may experience a slight resurgence. Granted, contract activity, with the exception of one stat, continues to decline, and the days it takes for a property to go under contract is increasing at a noticeable rate. However, the monthly price declines that have been occurring for the past 4 months have stopped. Not to mention, July continues the decline of inventory month to month, granting some leverage back to the sellers. Even though inventory dwarfs what it was last year, inventory is still surprisingly low relative to current buyer demand. Despite the price declines halting, July's sales price remained the same as June, and it remains to be seen if it will resume the price declines or start appreciating again. As always though, the listing strategy still matters. To get the best results, listing at fair market value will give the sellers the best chance at getting multiple offers in the shortest amount of time. For buyers, some market stats could be better. Of course, the previously mentioned factors of declining contract activity and increasing days on market come together to give buyers more leverage in the potential negotiation. In fact, there is one stat to take note of, which I mentioned was an exception, and that is the monthly increase in pending transactions. In June, the pending transactions went up 0.6% monthly. In July, it has gone up to 0.9% monthly. This could show that buyers are showing a greater degree of adaptation to today's market, albeit quite slowly. However, even though inflation hasn't been this low since 2021, mortgage rates are still elevated, and thus affordability is still an issue. Not to mention, the actions of the Federal Reserve are still up in the air until July's inflation data publishes on the 10th of August. We also have to factor in that the inventory posted a third monthly decline, and it seems like this pattern may be the new norm. Now, nothing has really changed in terms of trends to keep your eye on. Keep your eye on the Federal Reserve and the inflation reports. Some pundits say that a couple more rate hikes of 25 basis points will occur this year, mirroring the sentiment put out by the Fed during their July meeting that work still has to be done to lower inflation to 2%. This puts the spotlight on July's inflation report on the 10th of August and the Federal Reserve's meeting on September 19th. Well, this wraps up July's market report. If you have any questions about real estate, please don't hesitate to contact me over the phone, email, or any of my social media platforms. This is Oscar SanJuan with Vegas Strong Real Estate Group, signing off.